Let's talk about Trump's plan for 100% tariffs on everything from China. This isn't just a headline, it's a proposal that could shake the foundation of how Americans shop, work, and live. That means your $20 gadget could soon cost $40. And it's not just electronics. Think about clothes, toys, kitchen appliances, even the phone in your pocket. Everyday items could double in price, hitting wallets across the country. This isn't a tweak, it's a sledgehammer to the global supply chain. The flow of goods that keep store shelves stocked and factories humming would be disrupted overnight. The era of cheap Chinese goods is over if this goes through. For decades, low prices have been the norm, but that could change in a flash. The pitch? Make Chinese goods so expensive that companies have to manufacture in America. The hope is to bring jobs back home, revive local industries, and boost American manufacturing. But global economics aren't that simple. Supply chains are tangled, and moving production isn't just flipping a switch. It takes time, money, and new expertise. This is a seismic shift between the world's two largest economies. The ripple effects would be felt from Beijing to Boston, and everywhere in between. A 100% tariff is economic war, forcing US companies to rethink their entire business models overnight. Some may survive, others could fold, and many will scramble to adapt. It's not just about TVs or sneakers, it's about the web of components and labor connecting the US and China for decades. Every product has a story, and most are woven from threads that cross oceans. Pulling the thread could unravel the entire global wardrobe. The fashion industry, tech sector, and even food supply chains could all be caught in the crossfire. Trump is betting he can strong-arm China, but China has its own cards. They could retaliate, target American exports, or find new partners. This isn't chess, it's a game of chicken, and the consequences will be global. Both sides are waiting to see who blinks first, but the stakes couldn't be higher. Everyone, everywhere, will feel the impact. From the biggest corporations to the smallest families, this trade war could change the way the world does business and the way we live our daily lives. Rare earth materials, 17 elements crucial for modern technology, aren't actually rare, despite what their name suggests. In fact, they're found all over the world, scattered in the Earth's crust, and are more common than gold or platinum. What makes them rare is the challenge of extracting and refining them, which is a complex, messy, and expensive process. But here's the catch. China controls over 80% of the world's rare earth processing, dominating the global supply chain from mining to refining. This gives China enormous influence over who gets access to these vital materials. Your phone, your laptop, the dashboard in your electric car, even the guidance systems in military drones. All of these depend on rare earth elements. They're the hidden backbone of our digital and high-tech lives. Imagine if one country owned every coffee roaster in the world. You could have all the coffee beans you want, but without a roaster, you can't make espresso. That's the power China holds with rare earths. In a trade war, China could simply cut off rare earth exports, as they did to Japan in 2010 during a diplomatic dispute. The impact was immediate and severe, sending shockwaves through global markets. The Pentagon has called this a serious national security risk, warning that America's military readiness could be compromised if access to rare earths is disrupted. America's most advanced defense systems, from fighter jets to missile guidance, rely on a supply chain that is largely controlled by its main geopolitical rival. Restricting rare earths isn't just a trade move, it's a direct threat to US technological leadership and military power, with consequences that could ripple across industries. The US is scrambling to build its own supply chains, investing billions in new mining and processing facilities. But creating a self-sufficient system takes years, if not decades, and requires overcoming major technical and environmental hurdles. For now, China holds the keys to the world's rare earth supply, able to decide who gets access and who doesn't. They can turn the tap on or off at will, making any tariff strategy or trade negotiation look risky and unpredictable. Poking this bear could easily backfire, escalating tensions and causing unintended consequences for the global economy. The leverage is real and immediate. In the high-stakes world of rare earths, whoever controls the supply chain controls the future. China's other weapon? Nearly $1 trillion in US Treasury bonds. For years, China bought our debt, keeping interest rates low and trade flowing. But in a trade war, those bonds become a financial nuke. If China dumps them, bond prices crash, interest rates soar, and borrowing costs skyrocket for everyone. Mortgages, car loans, credit cards. everything gets more expensive. Fast. The US economy could plunge into recession. It's called the nuclear option for a reason. Both sides get hurt, but the threat alone gives China leverage. Dumping bonds would hurt China too, but in a desperate conflict, all bets are off. This isn't just about tariffs, it's about financial mutually assured destruction. The mere existence of this weapon changes the game. The stakes are higher than most realize. The tariff war could quickly escalate into a financial crisis. While all this plays out, China's central bank is hoarding gold at record speed. Gold is the anti-dollar asset, no government can print it. For 70 years, the US dollar has been the world's reserve currency, giving America huge power. By buying gold, China is building insurance against a dollar crisis. If the dollar tanks, say from a bond dump, gold holds its value. This is part of a bigger strategy: de-dollarization. China wants to reduce its dependence on the US financial system. Every gold bar in Beijing is a step away from dollar dominance. It's a slow, deliberate challenge to American power. Other countries are following suit. The world is quietly preparing for a future where the dollar isn't king. The shift is already underway. China isn't alone in ditching the dollar. In fact, it's part of a much larger movement that's gaining momentum across the globe. More and more countries are questioning the dominance of the US dollar in international trade and finance. Enter the BRICS: Brazil, Russia, India, China, and South Africa. Recently, they've welcomed new members: Saudi Arabia, Iran, and the UAE. Together, these nations represent a powerful coalition, spanning multiple continents and controlling vast natural resources and populations. Their goal: to build a financial system that doesn't revolve around the US dollar. They want to create an alternative that gives them more control and independence from Western financial institutions. That's why they're developing their own payment networks, designed to bypass Western sanctions and reduce their reliance on US-controlled systems. These networks are already being tested and rolled out in several member countries. After Russia was cut off from SWIFT, the world saw just how quickly access to the global economy can be shut off. For BRICS nations, this was a wake-up call, a reminder that financial sovereignty is crucial. Now, BRICS is working on a new reserve currency, possibly backed by a basket of their own currencies and even gold. This could challenge the dollar's role as the world's primary reserve currency. Oil giants like Saudi Arabia and Russia are especially motivated. They want to end the petrodollar system, where oil is traded almost exclusively in US dollars, and instead use their own currencies or alternatives. If global trade starts shifting away from the dollar, demand for it will drop. This could weaken the currency and reduce US influence over the global economy, changing the balance of power. The BRICS are evolving from a loose forum into a real geopolitical bloc, signing new agreements and coordinating their strategies more closely than ever before. Trump's tariffs and ongoing trade wars have only accelerated their efforts, pushing these countries to find new ways to protect their economies and assert their independence. The world is building an escape hatch from the dollar system. The implications are massive, and we're only beginning to see how this shift could reshape the future of global finance and power. What does all this mean for you? Get ready for turbulence. A 100% tariff would hammer the US stock market. Companies like Apple and Walmart would see profits vanish, and your retirement savings could take a hit. The dollar might spike at first, but retaliatory moves and de-dollarization would push it down. A weaker dollar means everything imported, coffee, cars, oil, gets pricier. It's a hidden tax on daily life. In chaos, investors flock to gold and increasingly to cryptocurrencies like Bitcoin. Gold is the ancient safe haven. Bitcoin is the digital alternative. A crisis of faith in the dollar would test both. For average investors, this isn't abstract. It's a direct threat to financial security. Traditional safe havens like US bonds could become toxic. Gold and crypto could become the new main characters. Volatility would be the new normal. In Washington, the mood is tense. Experts warn that a full-blown economic war with China would be catastrophic self-harm. Expect massive inflation and a deep recession. Supply chains would break, jobs would vanish. The Federal Reserve would be trapped, unable to help without making things worse. Agencies are quietly preparing for the fallout, modeling bond dumps, scrambling for rare earth alternatives. The US is confronting vulnerabilities built up over decades of prioritizing cheap goods. The political rhetoric is outpacing reality. The people with power may not be listening to those who understand the risks. The warnings are loud and clear. The question is, will anyone listen before it's too late? This economic fight could easily spill into military conflict, especially over Taiwan. China sees Taiwan as a breakaway province. The US is committed to its defense. If the US economy is reeling, would America have the will to intervene if China moves on Taiwan? Economic pressure isn't just about money, it's about weakening your rival's resolve. Every Dow drop could embolden Beijing. The US might flex its military muscle in response, raising the risk of escalation. When trust is gone, a small incident could spiral into war. The line from tariffs to missiles is shorter than you think. The stakes are now existential. So, is this the end of American financial dominance? The system that powered US prosperity is facing its biggest challenge yet, and we're accelerating it ourselves. The dollar's role as reserve currency isn't guaranteed. It's built on trust and stability. By weaponizing the dollar and launching economic war, we're pushing others to find alternatives. The dollar won't collapse overnight, but Trump's tariffs could speed up the shift. We risk trading long-term advantage for short-term gain. This could be a turning point in history. The end of US supremacy would mean a more expensive, less stable world. The decisions made now will shape the next century.